Good afternoon, everybody, and welcome to our Easy Properties webinar. My name is Carl, for those of you who don't know me, and I'm delighted to be your host this afternoon. Properties is something that a lot of Easy Equities users has asked for, and I'm extremely proud that we're able to deliver this innovative product. I've been part of the testing group, and what the team at Easy Properties have put together is really phenomenal. I'm joined by my teammate Standwa, who's head of content at Easy Equities, and he's going to be answering all your questions in the chat Q&A functionality. He's one of those guys at Easy Equities that knows everything, so throw him your questions and he's there to help. And then the man of the moment is Rupert Finnemore, who is the head of Easy Properties. And Rupert has been extremely nervous about this webinar, which has made me extremely happy. And I think he's been so nervous because he just wants it all to be perfect. So I was going to start off the webinar by wearing my Easy Properties, because this is our color, the blue, mask, because it sort of seems to be traditional when you start a webinar to awkwardly put it on and off. But I'll spare you that, Rupert. And before we get going, because this is a short webinar, I just want to give a quick update on where we are with timing with Easy Properties. So as I said, I'm part of the testing group. I've sold some of my holdings that I made some good money on, as many Easy Equities users have made, transferred into Easy Properties. I've added some new cash, and all of that's working brilliantly. All that remains now is for the last little bit of admin, crossing of T's and dotting of I's. So Rupert has been batting his eyelids at a few people and a couple of shall I say, government institutions, and we are very excited that we're going to be live for all the early adopters next week. So exciting times. Next week is our big week for Easy Properties. So Rupert, let's kick off. I'm going to invest in Easy Properties as an Easy Equities user. What do I do? How many properties are we starting off with? Let's kick off there.
Carl, we're starting off with 4 groups of properties. Each of we're calling them, but we're using a kind of collective noun for properties. So each one of these properties is made up of a number of units. We have got a collection of properties in Melrose called the Fitzgerald. We've got a collection of properties in the Rockefeller down in Cape Town. We've got a collection of properties at Green Reef Village in Boksburg. And we've got a collection of properties in the heart of Sandton in the old SAB building called Black Brick. So as an Easy Equities user, I'll be able to invest in 1, 2, 3, or 4 of those. Absolutely.
Cool. And how would I go about it? I mean, in explaining it to me, you've said it's a little bit like an IPO, which I think many Easy Equities users understand, but perhaps you can explain it to us. So when our site is ready next week, you're going to be putting up a prospectus on each one of these 4 properties.
That's right.
And I see there's a question already, how transparent? I'll answer that. We're very transparent at Easy Equities. We love sharing everything to everyone at all times. So in that prospectus, there will be everything in the minutest detail. And I must tell you that, Mr. Finnemore is detailed to the extreme, which is quite irritating. But everything will be there. So the prospectus goes up, Rupert, and what do I do then?
Yeah, so Carl, I think before one even looks to invest, I think property is largely about research. And so obviously the prospectuses will be there. Those are actually going to be emailed out to all of the clients before the website even opens. But property is all about research, and it's about location. So on the platform, we've provided a whole lot of Lightstone information, which is an analysis of the deeds office. Per suburb, you're going to be able to look at the kind of number of transactions that have happened and trends over the last couple of years specific to that suburb. You're going to be able to see what's been happening to the average sales price across those suburbs relative to the different kind of sets of property, whether it be sectional title, full title, or estates. So the first port of call is to have a look at what's happening in those areas in which the properties that we are offering. It's important then to read the investment case that we are providing, which gives you a lot of detail around what the investments offer. Again, the prospectus is also going to be available there, which gives a tremendous amount of detail budgets, assumptions, how the properties are going to be managed, who's managing them, all that kind of stuff. So you're going to read all of those things. Once you've decided what kind of property you want to invest in, you know, there's a number of things that one wants to take into account when you're investing in property, but I think maybe we'll get to that. You will put in an offer on the IPO. You know, it's an IPO process, which is basically the property companies offering up shares. People will buy shares, put in their money, and we'll use that capital to go and pay for the properties. So it's
Right.
yeah, very simple.
Cool. So I think, you know, for some people like me who don't need a lot of information, so I trust the brand. I know you headed up, MD of a large estate agency. So, you know, I don't need the detail. I just know that I want to diversify my portfolio. So I'm going to put my cash in and off I go. There are many other people who want all the detail, and we're going to get to some of the brilliant questions because they're highly technical. All of that's going to be on the site. Rupert and his team have been developing a bunch of FAQs. And so all of that information will be there if you need the detail. But yeah. Rupert, what are the minimums? So do I need to, what are the minimums?
There's no minimums. And I think that's what has probably generated so much excitement at the moment. I mean, we've got over 16,000 people that have registered for early access. There are no minimums. And I think that's what's making it really attractive. I think property is usually an expensive asset to invest in, and we're kind of taking that all away. So as much or as little as you'd like.
Great, which is one of the easy principles. Now, in the build-up to the launch, you've thrown it out there to people that that we're going to be getting these properties, the 4 that you've spoken about, at a good price, if I can use my very non-property language. Does that
That's
still
the
hold
right
true?
Property language?
Is that still true? Or, I mean, what are we buying into when we launch here?
So, yeah, we have been able to negotiate really good prices for these properties. You know, our property partners is a company by the name of Narrative. They are highly seasoned and quality developers. And through them and our bulk purchases, we've negotiated really significant discounts off essentially what is the market value of those properties, which we've
Excellent.
had verified by independent valuators and analysis of the markets and all of that.
Great. So Rupert, I get onto the site, I check out the prospectus, and I say that I want $1,000 in the Cape Town property. So I put $1,000 in the Cape Town property. What happens now? When can I realize some profit on that? Do I earn interest? Do I get any cash if somebody stays in the property? I mean, what happens with my $1,000?
Yeah, so I'm going to answer that question in 2 ways. I think that Cape Town one's a slightly different one because this is it's a development that's still being built, and so that's going to be ready later next year. But once the property is built, we will first of all, the money goes in and we use that money to actually buy the properties. And then it's just a traditional conveyancing process that happens. So, which is just, it's a process that happens in the deeds office. It's a registration of the new owners of the property, which will be our property companies, takes the property out of the name of the sellers. And at that point, the property transfers across into the property company's name. During that period, the money that's been raised will obviously sit and earn interest for the benefit of the property company and therefore the investors as well. Once that property is transferred into our name, those properties will be tenanted. We will start, the management companies will start collecting rent. We will withhold a little bit of that income for kind of rainy days. And I think that's something we can talk about just now. And the kind of profits that come out of those rental income will be paid across to all shareholders as dividends. And we're going to be paying across those dividends once a quarter. So that's the first way that you will earn. Another way that you'll earn is obviously in the capital growth, which is one of the real benefits of investing in property, and especially with these properties and with Narrative having organized those discounts. It actually just points to a really good potential for capital growth. So there's rental income, there's capital growth, there's the possibility of obviously buying and selling your shares, and a possible increase in the share value. But maybe that's a good point just to underscore that this EasyProperties is not we are not setting this up as a fund to trade property shares. No, I think it's really, really important that all of our investors understand that property, to realize good returns in property, you really want to be in for the medium to long term. This is not a buy and trade and a daily trade. You know, it's a medium long-term investment.
Yeah, Rupert, I think we need to be even more direct like that. If you're a gambler or you're a trader, this is not the product for you. You know, I can categorically state that. You need to look at this as something that supplements your investment strategy. You need to do your research and you need to check it out. And the process that you were explaining now might sound complicated to some people, but that's why there's so many regulatory protection elements, both externally and internally, for launching this element. So
absolutely,
I want to jump into the questions because we don't have a lot of time, Rupert, and I'm going to answer some of them. If I get it wrong, you can correct me. So can I fund EasyProperties from my Easy Equities account, or do I need to do it separately? You can do it as an inter-account transfer.
There are two ways. You do an inter-account transfer from Easy Equities from your ZAR account, or you can do an EFT deposit.
Yeah. So it's really easy, straightforward, and that's what we pride ourselves on as well. Devil's question I like here: can only a limited number of people invest in a property? And so, Rupert, my understanding is because it's similar to an IPO, the sooner we get in, the better, to a certain extent, which is why we're giving this opportunity to those that have signed up for early access. But at the end of the IPO period, we will all find out how successful we have been or not. Is that correct?
Yes, that's right, Coral. It's a little bit more complicated than that, but only marginally. If we are looking to raise 100 Rand for 100 shares, and actually there has been a request for 120 shares, then everyone's issuance will be kind of worked out on a pro rata basis. So it can be oversubscribed, but obviously the number of shares will never change, and everyone will kind of be given their allocation in proportion to that oversubscription.
Correct. Yeah, great. Can people invest, or can companies invest, or is this strictly for individuals, Rupert?
It's for individuals. Now, actually, while you asked that, I saw someone's question pop up around their 2-year-old daughter. Obviously, one can invest on behalf of kids, but there's as per Easy Equities, there are kind of requirements that are, you need to sign various documents to be able to enable that as well.
Yeah. People are very interested in the type of building. So are they purely residential, a mixture of usage? Are we going to add more buildings, or is it these 4 and that's it for EasyProperties?
No, I think that's the exciting thing. And again, it points to our property partners. We have got access to an unbelievable amount of really quality properties. At the moment, we are focusing on residential. So these particular buildings are all residential. They are all sectional title, which essentially means they are apartments or townhouses. I think a lot of the buildings, they offer that kind of eat, work, live, play. They've got amazing facilities. I'm just thinking off the top of my head, there are yoga gardens for the more zen of us. There are bars, which you will obviously enjoy, Coral. There are restaurants, the pools, gyms, not in all of them, but across the mix. So at the moment, it's residential, and that's what we're looking to focus in the beginning. We will obviously, after this session of properties has been completed, we will load more properties onto the portal. So cool. We've got really high ambition of offering a massive variety of properties to our investors.
COVID put a little bit of a damper on our plans, but we were planning to host some live functions at these properties with Rupert and our narrative partners. And we're still going to do that in the not too distant future. It will just be a slightly different experience. But I think one of the advantages for Easy Equities users, they can physically see, touch, go to these properties. They're not amorphous property investments.
Yes.
I'm jumping ahead just because I'm conscious of time and there are lots of questions. So Rupert, I come on, I join the IPO, I put on my $1,000, process ends, and I'm now a shareholder in one of these properties. Let's say the one in Sandton.
Black brick.
Black brick. When do I have the ability to sell that investment, and how does it work? So some users are saying, well, if I buy a Sasol share, I know I can sell it tomorrow. Although maybe that's not the best example, but if I buy a share, I know I can sell it tomorrow. With my Easy Properties investment, how does that work?
So again, this is a good point to underscore the nature of a medium-term, long-term investment. If you're looking to invest in residential property with money that you might need for rent next month or for school fees next month or whatever it might be, then this isn't the investment for you right now. This is money that you can put in and enjoy medium and long-term returns. Obviously, things happen in the world. And so, you know, I think one of the fundamental issues that we've solved here, if you're an individual investor in a residential property and you need to get funds out, you need to go through the process of selling that property that you own, et cetera, et cetera. What we've allowed here is that once a quarter to be determined, but we will be holding a share auction, which is, you know, a normal kind of auction trading scenario, where guys will be able to sell out of their shares. Obviously, there's no guarantee there'll always be a buyer, but certainly there will be a process where people can buy either more shares or sell out those shares should they wish to. I think at this point as well, it's important to say that the investment horizon for these terms is between 5 and 7 years. So at the end of that period, we will look to exit the investment and either sell those properties back into some Easy Properties investors, or we might sell it out in the open market, and then people will get a share of the realized capital after that point.
Rupert, there's some great questions here relating to tax and potential tax leakage, the total cost of investing. We won't be able to answer all of them, but they are all covered in the FAQs, and they're all great questions. But maybe just to highlight some of them. So what are the costs here, and how does it compare to investing in property at the moment on the JSE?
Okay, so there are a couple of different ways. Obviously, there's the initial fee that guys are going to pay is an IPO capital raising fee. So there's a 1% charge of that. So the amount of the value of the shares that you apply for, should that be successful, there's a 1% charge on that. There is a 0.6% platform fee, which is basically worked out on your assets under management. So your total investments in the property, 0.6% of that charge per annum. There's the manner in which you're going to earn money is obviously we are going to pay investors through a dividend process. So there's dividends withholdings tax that will be applied, which is much cheaper than income tax generally. That's 20%. An example of that, you know, if you're investing in one of the REITs on the JSE, you are paying income tax on that investment. And then, you know, when you're buying and selling shares, there's the normal statutory costs, administration costs and straight costs. And, you know, there'll be a fee attached to that. If you want to buy and sell additional shares through that auction process, there's going to be a fee of 1.5% on that as well.
Cool. So to those that are asking about the webinar being available afterwards, it will be available afterwards. We'll send a link to everybody who is who registered, and it will also be available via the Easy Equities YouTube channel. So Rupert, putting you on the spot here because of the fantastic questions, and there are loads of them. Are you happy that we commit that when we send this link out in the course of tomorrow, that we would add a link to a couple of the FAQs that cover the questions?
Absolutely. I think
and that
a
you would
lot of them are probably
answer.
covered already, but
Yeah.
yeah, absolutely. There will be some. So I will happily burn the midnight oil and make sure every single question that we haven't covered has been answered.
Yeah, great, thanks. I mean, for me, these questions prove a couple of things. One, that Easy Equities deciding to launch Easy Properties was fundamentally based on our users saying this is what they want. And the interest, passion, and knowledge that the users showing is phenomenal. And secondly, our CEO and founder of Easy Equities is a big one to always make the point how smart retail investors are. And if you look at the questions that are coming through here, it just proves again that Easy Equities people are bloody smart, and no wonder your portfolios are all performing well. At the end of May, just as a matter of interest, as an average, Easy Equities users were up over 10%. And I really hope, Rupert, that what you and your team are doing here with Easy Properties is going to allow us to diversify and improve our portfolio. So it's very exciting. But yeah. Rupert committed, so all these questions will be answered by Rupert either through FAQs or through the mail that we'll send out with the link. Rupert, yeah, I'm just looking at the fees and some other stuff that we want to do here, but I think let me park here a little bit. Valuations. So you've explained to us that we will share information from Lightstone and others in terms of valuations. Can you repeat how it works when the auction happens and I sell? So at that stage, how the property is valued?
Okay, so we will have independent valuations done on the property portfolio in each of those companies every 6 months. There will be a desktop valuation done by an independent valuator, and once a year we'll actually go out and do a physical valuation, again through an independent valuator. That's obviously giving a value to the assets in the business, well, in that individual company. But again, like anything, once people are looking to potentially buy additional shares or sell additional shares, that's determined by a willing buyer, willing seller, and supply and demand. And so obviously there will be a history of what the share price was. Maybe I must say at this stage, at IPO stage, every share of the property is going to be valued at R1. And so as an example, if we are looking to raise 2 million Rand to buy those particular bunch of properties, we will issue 2 million shares at R1 each. And that's going to be standard for all of the IPO properties that we do. When it comes to actually looking to sell your shares or buy additional shares, that happens through that auction process, and a price is determined via that. Obviously, there will be guidelines in terms of the valuations of the properties and income and things like that, but that's a willing buyer, willing seller scenario.
Great, thank you. Rupert, some general thoughts around property as an investment class. So some users are saying, well, property's had its day. If you look at property returns over the last couple of years, it's been poor. I mean, is that true? And is that something we should be aware of? What are your thoughts on property generally?
Yeah, look, properties has, I think, traditionally been a really good investment. I mean, those days of the property market trucking along at 30% per annum aren't here now. This is not that investment. And so I think for the discerning investor, property is still an excellent opportunity to invest. A, from a diversification point of view, but B, also from an income and a capital growth point of view. I just saw Lightstone release their latest report earlier this morning. It came out just before this webinar. And they were talking around the national property market increasing at, I think it was just under 3%, which is a very broad statement. I think as soon as you start drilling down into where these areas of growth are happening and those kind of returns, you get far more interesting information. And so one of the things that we've done also with our property partners, I hope he's on the call, is Andrew. He's a very smart guy, and he's put together all of these budgets for us. And he's made certain assumptions in the budgeting, and it was actually really encouraging for me to read this Lightstone report today, which, you know, the entry level and the mid-level kind of properties, which we are offering initially, is actually increasing at the highest rate across the whole property market. So that was really encouraging. And at the moment, that's north of 5%. But again, you know, when you invest in property, you got to look at two things. You've got to look at the yield that you're getting, which is essentially your rental income divided by your purchase price, which gives you a percentage yield. So you want to look at that from an income point of view. But equally as importantly, you got to look at the capital growth. And I think that's what's really encouraging for me, is that we've been able to negotiate significant discounts off of the property market, which points to really good capital growth for our guys.
So now that you are sucking up to Andrew, maybe you can carry on and explain to us a little bit how costs are going to be managed. A couple of users are asking
sucking up to Andrew because he's raised his hand to organize the launch party.
Okay, great.
So I just want to make sure I'm getting an invitation.
Good. So how are costs managed in terms of the property management and that kind of vibe, Rupert?
Yeah, so that's been outsourced. We have outsourced that to property experts. We've contracted with a company, hopefully a lot of people on this call would see. It's called House Me. They are, I think, one of the leaders in prop tech and innovation. They're going to be managing quite a few of our developments. We've negotiated a really good fee with them as well. And that would include finding tenants, doing credit checks, collecting rent, chasing up the potential for bad debts, you know, guys not paying their rent, things like that. The other costs are we're going to manage those other costs by, I can't remember if I said it before, but from all of the rental income that we get, we are going to be holding back 15% of that rental income. It's still going to absolutely accrue to the investors, but we're keeping that as like a pool of funds for a bit of a rainy day. You know, should there be any damage to a property or maintenance, or a guy doesn't pay for a period, or there are periods of vacancy, that we've got a fund that will allow us to kind of transact and, you know, through those kind of rainy day periods. Yeah, so obviously the costs are really tightly managed. I mean, the other thing which has been really great is because we are negotiating with a bulk of properties on us, a lot of the professional fees, actually, I think I spent my first month of my career here at EasyProperties just negotiating discounts. We've had 50% discounts on a lot of the kind of professional fees that we are kind of contracting with. So obviously that's absolutely key for us.
So Rupert, I mean, some people might think this is a stupid question, but why don't I just buy a flat? I mean, why is this a better option than owning physical property?
Well, this is in effect owning physical property, obviously through a company, but there are a number of different reasons. One is diversification. Well, probably the first one is cost. You know, if you are an individual investor going out and buying an apartment, not all of us have got an extra, whatever it is, 1 million rand, 500,000 rand, 2 million rand, whatever it is, to go and buy a property. You know, you are also having all of your eggs in one basket. And I think that's where a couple of people have come a little bit unstuck during this period of COVID now. If your tenant, you've got one property that you own and your tenant isn't able to pay, you better make sure that you've got, you know, money in reserves for your bond and for everything else. What we've done here is we've allowed people to invest in property and diversify that risk, and obviously invest with whatever spare cash they would like to put into property. But just by the mere fact that we have, in one of our developments, we've got 8 units, you know, that risk of an individual property is spread across all 8 in terms of non-payment or vacancy or whatever that might be. The fact that we are buying directly from the developers means you don't pay transfer duty and you pay VAT, which is often a significant saving. And obviously, yeah, just the nature of the big investment that it usually takes to invest in property. We've taken that pain point away by being able to invest with any amount that you would like.
Rupert, how long will the IPO be available? So the process,
It's a month, 30 days.
Okay, so as a user, I'll go on, I'll activate my EasyProperties account.
Yeah.
I'll have access to the prospectus. What's the plural of prospectus? Prospecti.
It's actually prospectuses.
Prospectuses, okay.
Yeah, who knew?
Prospectuses. I'll check out if I want to have exposure to one, some, or all of them. I'll put on whatever cash I want, no minimums, and it's then open for a 30-day period.
Yeah.
Okay. So we are going to end off there. It's our very short webinar. Just to the guys helping me run the webinar, please don't close everything because we do need to capture all the questions.
Yeah, I see there are a lot.
There are a lot, and they are fantastic questions. Rupert has covered most of them in FAQs, but he will get onto this. So, Rupert, I want to conclude by saying a big thank you to you. And this is a blatant and completely subjective punt. So let nobody be under any illusion that it's not. One of my roles is that I'm the Chief Marketing Officer of Easy Equities, which is a job made easy because our hundreds of thousands of clients actually do most of the brand building. And the brand guys.
Don't forget the second part of your job, which is just keeping an eagle eye on Charles Savage and some of the other guys upstairs, eh?
That's true, but it is fantastic to be part of a movement with a couple of 100,000 users and a small bunch of Easy Equities people whose sole purpose is to make investing accessible to everybody. And whilst we get things wrong, we work hard at fixing them. And it makes me extremely proud that we're about to launch this. Give your questions to Rupert, keep him on his toes. If you need any information once we've launched, mail him, contact him. He doesn't need to sleep, and we really want to make this work. So good luck to everybody.
Carl,
good luck to you, Rupert.
Sorry, one other thing. Thank you for that, Carl. One other thing I'd like to say, there's obviously a big tradition of Q&A that goes on Twitter. I see Charles has just piped up with a comment there, but and Easy Properties is the same. I mean, I've been really pleased. A lot of people have been asking me questions on Twitter and direct messaging me. Keep that up as well.
Yeah, absolutely. We love the engagement, and we don't want to lose the human touch. So any questions, welcome. Any comment is very welcome. And we look forward to you investing with us. And great to work answering those questions, Rupert. Thanks, Danwa, for helping answering. Thanks for hosting us. And speak to you soon, Rupert, when you send us an invite for the launch party.
Lekker.
Cheers,
Thanks,
guys.
everyone.